So let's go into chapter 2 of our ebook. I want to go into chapter 2 of our ebook, right? And in chapter 2, I talk about liquidity sweep, the smart money trade. And when I'm talking about the smart money trade, I'm showing you this from a whole different angle than most. And when I say terms like sell side liquidity, buy side liquidity, when I'm saying these terms, you're gonna have a better idea as to what it is I'm talking about specifically when we're trading. Okay, so it says retail market participants are hardwired to anchor their technical setups around clear historical boundaries. When placing long entries, retail protective stops are heavily clustered right underneath major swing lows, forming a deep pocket of sell side liquidity. Conversely, retail short orders congregate above swing highs as buy side liquidity. Algorithmic engineering. Large financial institutions cannot simply buy thousands of lots at market price without causing excessive slippage. To fulfill major buy orders, the algorithm deliberately engineers a short-term drop designed to pierce through those key retail swing lows. As retail stop losses trigger, they convert directly into sell orders, supplying the exact counterparty volume that institutional algorithms need to fill massive long positions or massive short positions. Because you can look at this from both when you want to go long and when you want to go short. I'm gonna show you an example of when we went short this week, right? When we went short this week and when we went short on gold. So let's go to the live example of that. And this is education for you all, right? I want you to be able to grasp this knowledge and this information so that you can become a better trader. That's what it's about. It's about making you better. So every day when you show it to the market, you just have a little bit more confidence within yourself and a little bit more confidence when you hit that trigger. Guys, we should have took longs on gold. Oh man. Now that now I'm looking at gold, I'm like, boy, man, I was sitting there thinking that this morning, like, man, there go the gold, the long for gold this morning. That would have hit and would have been beautiful. All right, so let's see exactly an example of that liquidity sweep. I'm gonna show you. I'm gonna show you from when we went short. So you see here where we went short this week. Now let's do a replay of this. Hold on, I went back for some reason. Let's just do a replay, right? I'm gonna go to the 5-minute chart and I'm gonna show you this on the 5-minute chart, right? Of how it's come back and sweep liquidity and then enter into the short. So the trade happened. Let's go. Here we go. So the trade happened here, right? This is where I entered into position, but I saw shorts coming because I saw the displacement here. But price was not done because it wanted to do what? Sweep liquidity, right? So if I were to drop down to the 5-minute chart, you see this? You're thinking, okay, we're primed for shorts. Let's watch how this played itself out. And then when we entered into the trade. You see how we got full displacement here, broke this level, once we broke this level that was here, you get displacement here. A lot of people went short here and had to hold their positions if you didn't have your stop right here above this level. This is where your stop should have been if you was a person who entered into the trade here or here at a break below this level, right? Create a fair value gap. You enter at the fair value gap. You start to go short. Price starts to reverse a little bit and consolidate on you. If your stop was here, look, you would have got what you wanted. And look how it delivered for me on my entry. I just waited to be patient. And I was patient enough to be able to get exactly what I wanted on that trade. Because I waited for what? The next draw on liquidity, which meant my stop was here at this level. I enter, go into drawdown a little bit. It comes. It could have taken me out of the trade, but it didn't. It acted as if it was a what? Liquidity sweep. Whoosh. And then we trade lower. Once you're able to have those type of examples bestowed in front of you, once you're able to have true understanding of the market itself and how it's moving, you are impossible to stop at that point. Nothing can stop you. You're all the way up. Seriously.